US stock indexes are likely to enter this year in a bear market, where they have remained for almost the whole year. They moved down in Friday trading. Analysts are summing up the results of the year, while investors are wary of future prospects. The risk of a recession in 2023 persists. And let's discuss in detail the highlights of the American session and make predictions for the new year. US stock indexes managed to rebound yesterday amid the initial jobless claims report. They closed the session with gains. The Dow recouped almost all Wednesday losses before the close. It added 345 points or 1.05%. The Nasdaq logged the biggest gains, rising by 2.59%. The S&P 500 was able to win back 66 or 1.75%, closing at 3,849 points. The sentiment in Friday's pre-market trading changed dramatically. From the green corridor, the index slid into the red zone. Almost all risky assets dipped, and US stock futures declined sharply, extending its annual losses by 0.4% and 1%. Apparently, the prospects remain gloomy. The only hope for a rebound is upbeat PMI indexes, which may facilitate the stock market growth by the end of 2022. The S&P 500 is likely to fluctuate in the range of 3,780 and 3,880 points. The benchmark stock indexes closed higher on Thursday amid low trading volumes. Shares of all 11 sectors included in the S&P 500 grew, while the communication and the tech sectors notched the best performance. They climbed by almost 3%. Apple, Alphabet, Microsoft, and Amazon, whose shares have been dropping sharply over the past few sessions, advanced by more than 2.5%. Tesla stock rose after CEO Elon Musk told employees not to be too bothered by the stock market madness. As mentioned above, yesterday stocks grew thanks to weekly data on initial jobless claims. The number of jobless claims increased last week. The yield on a 10-year government bonds fell by 2.2 basis points. And the Fed's aggressive tightening has undermined the bullish momentum this year. The S&P 500 index lost 19.3%, and the Nasdaq diverged by almost 33%. Before the last trading session of the year, the tech, consumer, discretionary, and communication sectors declined by 29% and 40%, showing the worst results among the components of the S&P. Shares of energy companies demonstrate an annual gain of 57%. In 2022, the consumer discretionary sector index was hammered with a 38% loss due to Amazon.com's 50% drop and Tesla's 66% decline. Some $1.6 trillion worth of shareholder value evaporated after investors abandoned high-growth stocks with pricey earnings multiples. Nevertheless, demand for stocks with high dividend yields and stable profits limited the losses of the Dow Jones, which dropped only by 8.5% over the year. Today, these figures may be slightly revised, whereas the market sentiment will hardly change. The main stock indexes are likely to note their first annual decline after 3 consecutive years of growth. The S&P 500 and Nasdaq could show their biggest annual losses since the 2008 financial crisis. Shares of the most interest rate-sensitive tech and fast-growing companies such as Apple, Amazon, Alphabet, and Meta fell between 0.4% and 0.6% on Friday. High rates also deprived the tech titans of $3.6 trillion. Meta and Tesla tumbled by more than 60%, while Google and Amazon sank by 40% and 50%, respectively, in 2022. Judging by the annual results, the era of easy money is over. It's unlikely to occur for a long time, taking into account the return of short-term liquidity to the central bank. The situation may worsen in the first quarter of next year. Investors are also looking forward to the earnings season next year. They are concerned about the likelihood of an economic downturn due to a sharp increase in rates. Just over half of the 50 U.S. states are exhibiting signs of a slowing economic activity, breaching a key threshold that often signals a looming recession, the new research for the St. Louis Fed said. The San Francisco Fed also notes that the U.S. economy may fall into recession at some point in the coming months. According to Philadelphia Fed data tracking the performance of individual states, 27 noted decline in activity in October, and that's enough to point to a looming downturn, while standing short of the numbers that have been seen ahead of some other recessions. With such forecast, it's quite difficult for traders to be optimistic, so analysts are casting doubt that the sentiment could change in today's session. The US dollar index is recovering as investors have shifted their focus to safe haven assets. After sliding to the level of 103.70, USDX managed to rebound by 0.14% on Friday, coming close to the 104 mark. Its anticipated trading range is limited by the levels of 103.5 and 104.20. A $14 trillion wipeout in the stock market could mark the second worst year for risky assets, while the safe haven dollar can boast of the successful year. The Fed delivered an impressive 400 basis point rate hike that helped the US currency stand out against its main rivals. The US Federal Reserve became the first central bank among advanced economies to contain stubborn inflation by means of aggressive policy tightening. In 2022, the US Central Bank raised interest rates by 4.25%, the most since 1980, thus pushing borrowing costs to the highest level in 15 years. In addition, the Fed announced that it would stick to its aggressive policy in 2023, and the dollar index enjoyed one of its strongest years ever, up over 8% year to date. The dollar advanced across the board, with the USDX hitting a yearly peak of 114.8 on September 28, the level not seen since May 2002. Although the dollar index is spending the end of the year trading at lower levels, the safe haven currency is expected to remain in demand, at least in the first half of 2023. Speaking of the loonie, the situation is rather stable. On a Friday, the USD CAD pair extended losses and settled around the level of 1.3538. As for its further movement, the pair is expected to trade in the range of 1.3490 and 1.3590. The Canadian dollar hovered around 1.35 and was down by over 6% in 2022. Concerns over economic growth and the weaker oil prices forced investors to stay away from the loonie. Oil traded mixed on a Friday, but was still in a track for a second annual gain in a row. Crude rose in March, with the global benchmark Brent reaching 139.13% per barrel, its highest level since 2008. However, in the second half of 2022, oil prices posted heavy losses on fears of a global recession. Over the year, Brent appears to have added more than 7% following a 50% jump in 2021. US crude is set to advance by 4.1% in 2022 after a 55% rise last year. The global unemployment rate is expected to increase sharply in 2023, which in turn will limit energy demand. Therefore, oil prices may fall to $60, thus putting stronger pressure on the loonie. Meanwhile, the cryptocurrency market is suffering setback. Today, Bitcoin has slid by 0.8% to $16,480. Ethereum, Solana, Ripple, and Litecoin have extended losses by 0.3% and 1%. Bitcoin is ending 2022 on a weak note. The dominant cryptocurrency lost 60% of its value, while the broader crypto market shed $1.4 trillion due to the collapse of Sam Bankman-Fried's FTX and Celsius, as well as the Terra, USD, and Luna stablecoins. However, the worst is yet to come. As for the short-term outlook, digital gold is likely to spend the last trading day of the year drifting within the levels of $16,200 and $16,800. And this is how InstaForex analysts see the end of 2022 on Wall Street. We hope the last trading day will bring you a good mood. May your trading be lucrative, and happy holidays, and see you in 2023.